Gold has been a hotspot asset right now, with Trump's tariff threats driving gold to its all-time high. But is it truly a reliable investment? Gold fascinates me because it sits at the intersection of macroeconomics, psychology, and geopolitics. This project combines datasets from the World Gold Council, LBMA, S&P Dow Jones Indices, BLS, and the VIX Index to gather insights on whether gold is a safe haven asset like most people would say. First, let's establish the big picture. This chart tracks gold prices from 2000 to 2025, with projections generated from exponential triple smoothing. The red callouts mark crisis events such as the 2008 financial crisis and COVID-19. Notice how each crisis is accompanied by an upswing in gold, except the Russia-Ukraine war, with a slight initial decline due to shock. This means when there are times of uncertainty, people resort to stable assets like gold. When the demand for gold increases, the price shoots up. To further see how the price of gold and the US market move over time, let's move to this interactive timeline chart. During the 2008 financial crisis, the S&P 500 crashed while gold remained stable, even increasing steadily for the upcoming years. Next, we have the 2011 market crash, which we know as the Black Monday, which caused S&P to drop by almost 7% in a single day, while gold surged. The next major timeline is the COVID-19 lockdown, which caused gold to rise up while the S&P dropped by almost 30% in a single month. The Russia and Ukraine war caused both gold and S&P to plummet initially due to shock, but their values rose over the subsequent years. Lastly, we have the tariffs regulation and US-China trade war, which pushed gold to an all-time high, marking the fastest growth for gold in decades. To translate prices into something tangible, I simulated a $100 investment in gold versus the S&P 500. The S&P had negative returns from 2000 to 2010, while gold kept steadily increasing. In the end, we ended up with $1,400 for our investment in gold and only $470 for the S&P. What's interesting is that the price of gold increases when there's a financial crisis, while the S&P drops. We will dive deeper on this later on in the video. A lot of people say that gold is often called as an inflation hedge, but the data says otherwise. This graph shows how gold prices and US inflation rate move over time. The pattern is random, and their correlation is only 0.09, which shows that the inflation does not influence gold prices. So, what moves gold prices? The answer is fear. To prove this, let's move on to another topic, volatility. Volatility is defined by this formula, which is essentially the cumulative price difference over a period of time. In other words, it's a measure of how risky an asset is. Higher values mean the price fluctuates more dramatically, while lower values mean the asset is more stable. If we see this graph, we can see that in every major crisis, the volatility of both gold and S&P 500 spikes up. This proves our point. The price of gold is indeed driven by fear. We can see that the volatility data of both assets are very correlated, with S&P being the riskier investment as it has higher spikes. But here's the interesting part. On every major crisis, gold averages a 13% return over 9 months, while the S&P drops 7.3%. But is it enough to conclude that gold is a safe haven asset? You see, gold supply is not infinite. Unlike stocks which can be issued by the company, gold is very rare. In fact, you can fit all the gold in the world inside a 22-meter sided cube. If we see the dynamic tree map on the left, we can see that as time goes on, more people are seeing gold as an investment rather than luxury. This will ultimately drive the demand for gold in the upcoming years, especially from central banks, which will make gold a stable asset for investment. Bringing everything together, gold is neither a get-rich-quick asset nor a perfect inflation hedge. It serves as a portfolio stabilizer, and I think it's a safe haven asset as it is backed by central banks and limited supply. The demand for gold keeps increasing these recent years, and as long as it keeps up, gold will always be viewed as a safe haven investment. Thank you for listening.